In this short tutorial, you'll learn about the cash flow statement. The cash flow statement provides information about the cash flows of a company. The cash flow statement applies to a period of time. The cash flow statement classifies cash flows into either cash flows from operating activities, cash flows from investing activities, or cash flows from financing activities. Here's a simple cash flow statement. You can see the cash flows categorized into the three categories. Positive cash flows indicate cash inflows to the company. Negative cash flows indicate cash outflows from the company. You will see that there was a net positive cash flow from operating activities of $27,000, a net negative cash flow from investing activities of $9,000, and a net positive cash flow from financing activities of $13,000. So overall, the net increase in the cash balance was $31,000. Cash at the beginning of the period was $2,430. Therefore, cash at the end of the period was $35,430. Let's look at the first category, cash flow from operating activities. This category applies to the cash flows that occur in the day-to-day activities of the company. These day-to-day activities include payments to suppliers and sales to customers. In our simple cash flow statement, we can see the cash flow from operating activities of the company. The company received $83,000 from customers for goods or services delivered by the company. The company paid $56,000 to suppliers in payment for goods or services received by the company from the suppliers. Net cash inflow from operating activities was $27,000 positive. Let's look at the second category of cash flow from investing activities. This category applies to the cash flows that relate to the investing activities of the company. These investing activities can include purchase and sale of assets. These investing activities can also include purchase and sale of shares in other companies. In our simple cash flow statement, we can see the cash flow from investing activities of the company. The company paid $9,500 to purchase new equipment. The company received $500 for the sale of equipment. Net cash outflow from investing activities was $9,000. Let's look at cash flow from financing activities. This category applies to the cash flows that relate to the financing activities of the company. These financing activities can include purchase or sale of the company's own shares. Financing activities can also include borrowing or repaying loans. Financing activities can also include paying dividends. In our simple cash flow statement, we can see the financing activities of the company. The company issued its own shares and received $3,400. The company took out a loan and received $16,000. The company repaid a loan and paid $5,400. Net cash inflow from financing activities was $13,000.